Today is an important day, ladies and gentlemen, as the American election is about to take place. It, of course, is the 5th of November. It's bonfire night here in the UK. But more importantly, over the sea, over the pond, America is having an election. There's going to be great ramifications of this, not just internally to America, but the world as a whole. And as crypto investors, we're very kind of selfish in regards to really looking for how it's going to affect us. And we do think there is ultimately a more bullish and a bearish case that comes out of this. However, there's a lot of anxiety going into this, and I want to calm a little bit of that. We spoke about that yesterday and how we ultimately thought whoever won, there was only going to be one inevitable outcome for the markets, and that is ultimately they go higher. And I'm going to show you some data that supports this in regards to the longest Bitcoin chart that we have going right the way back to 2011 and elections that have taken place and how the market typically reacts post under both sides of the political spectrum. So we will be doing that to start the video off. Then we're going to be reiterating crypto sentiment once again. It's a very important metric to watch, certainly in the form of Google Trends. It shows who's looking at the cryptocurrency space right now. And as far as retail is concerned, Google is there going to be their predominant method. And ultimately that's at, essentially bear market lows, FTX capitulation lows. It looks, the Google charts trends over the past 5 years, exactly like most of the altcoin market from a price point of view. And ultimately, it's a great indication of retail participation that largely isn't here. When you look at the likes of Bitcoin, Ethereum, Solana, they're ultimately where they are due to that institutional interest, and we can get that from the likes of CoinShares. We might be looking at CoinShares towards the end of this video. Retail largely isn't here. The bad news is that is the case. The good news is it is still to come. And then we're going to be showing some charts that ultimately make us bullish on the crypto space as a whole. Of course, Bitcoin, the likes of Total 2, Total 3, others, and we'll look at Grayscale Digital Large Cap Fund, which I think is going to open the door for many institutional investors out there. So we have quite a lot to get into. Let's start things off with the pressing matter of the day. And we're going to show you some overlaying of cycles here. Of course, I'm talking about the election, which is ultimately taking place today. Now, the results of this election I don't think are going to be in for a while. However, on here, the BLX, the longest chart that we have for Bitcoin going all the way back to 2011, we have the elections plotted out. And there was actually indeed, it's gone away because it's on the weekly, an election that took place obviously in 2020. And what you can see here, and what we're trying to show here, going and starting back in 2012, when the election takes place and what the market typically does after. And you'll notice a trend here. This doesn't just apply to Bitcoin, it applies to the broader investment landscape. A lot of people believe and would swear that markets move in a kind of election cycle-esque pattern. It aligns with the Bitcoin 4-year cycle that we're going to show you in a minute, global liquidity cycles, things like business cycles, they all center, in my opinion, around that global liquidity. And there's an element of the election in that. But going back to 2012, you can see the election that took place and, of course, Bitcoin's reaction after that. And the altcoin market is largely just going to follow it. Of course, there wasn't much of an altcoin market in 2012. In fact, did we have any altcoins? I don't believe so. Perhaps Ripple's, or it was then known as Ripple, perhaps not XRP, I think came about in 2012. But generally, the altcoin space didn't exist there. But you can see what we're trying to highlight is what typically happens post-election. So that was the case in 2012. It was also the case in 2016. And also the case in 2020. Is that going to be the case today? Well, history would have us believe it is. Also, we have the halvings that take place that ultimately drive that 4-year cycle, also aligning in regards to where we're at. And if you look at the typical time that Bitcoin takes to sort of consolidate post-halving, we're right on track. And there's a normalization that we can bring to this space. If you look at Bitcoin dominance, how long that typically takes to roll post-halving, we can do it right here. It really kind of normalizes the sort of price action that we're seeing with the altcoin market. And we think people are getting very impatient with this market. We're seeing lots of people sort of come out and capitulate, certainly content creators, in regards to perhaps some of the negative sentiment towards them. and making claims like the market is dead, crypto's dead. I'd actually argue the opposite. I've never seen such inspiring and interesting news coming out of this industry and actual steps towards adopting it taking place. So we have the election cycles, we have the halving cycle, and we're right on track in regards to how long it takes for Bitcoin dominance to roll. Hang in there, guys. You ultimately will be rewarded for your patience, and the markets are exceptionally good at taking from the impatient and giving to the patient. Warren Buffett himself said that, and ultimately I think that's very much the case today. And when you look technically at the markets, we really don't think it's a bad picture that's being painted. So also to note, with these elections, there's been both sides of the political spectrum that have won. I've given my opinion on who I think is more bullish for the industry. In regards to some of the polls, it looks very close. It was going one way going into it, and now it's very much going the other. Be very careful out there, guys, in regards to how media are sort of putting a slant on all of this. Ultimately, they've got agendas to fill. Everyone's a special interest, as sort of Milton Friedman would say, and that's why he ultimately believed in the free markets, and then achieving the true will, perhaps, of the people. But that's another debate entirely. What we really want to show, as today's such an important day, is the sort of sigh of relief that you can gain from understanding what the markets do historically post-election. And I think we're right on track to do a similar thing today. And the beautiful thing with that is we have technical targets that also confirm that. After Bitcoin broke out of this sort of broadening channel, it's very common once you break some sort of a trend line, the descending capping sort of trend line that we've been under in this sort of megaphone structure, as Francis Hunt would call it, bull flag, broad bull flag sort of structure. It's very common once you take a resistance level, you'll come back and find it as support. And I really think that's what's taking place today. So we really don't have anything to worry about. There's multiple cycles pointing in the same direction. We could go even further into this and look at what the dollar's going to do and how that's going to drive liquidity and global liquidity cycles, thus the markets. And I think this kind of notion that the markets are going to crash, it's not really the case. I think you're going to get a lot of drama over what's coming. However, it will work itself out, and there's only one eventuality, and that is the proliferation of the currency system, which is ultimately how we exist as an industry, which I think is a key takeaway to take away with you. We've been speaking over the past couple of days about the sort of interest in the markets right now and how it's non-existent. Still very much the case. However, yesterday we used the analogy of why retail will show up, and we looked at the gold rush. Why did everybody go to America? Well, for the prospect of getting rich, and it was quite a travel, it was quite a journey back then. It wasn't like just hopping on a plane like it is today. People will come back into this market, but the problem with retail is they get back into it at a time when the smarter money is already accumulated. So they typically come in very late in a cycle. Ultimately, the optimal time, I think, to be investing in an asset is when you see it basing. Phase oneing is what we call it. Preferably when it sort of breaks out of that base, initially breaks out, that's a great time to get in, or when it pulls back into the initial breakout of that base, which many altcoins are doing, by the way. We've looked at many of them, including Ethereum. And ultimately to then be able to ride that uptrend that is sort of fueled by more and more interest coming back into the space and retail participation. And we're at literally FTX sort of lows in regards to Google Trends for crypto broadly, and also Bitcoin. Which is interesting because Bitcoin is obviously Bitcoin has obviously gone on and put in a new high, and there's no retail interest in the space. So who's done that? Well, it's largely been institutions, ultimately front-running retail, and they're going to push BTC higher as a result of it. During this pullback, we've seen nothing but continued accumulation. In fact, I was looking at CoinShares report yesterday. We didn't get to do a daily yesterday, unfortunately, guys. And that was $2.2 billion worth of inflows. There was some outflows in regards to Ethereum, still suffering from grayscale. And it hasn't quite had the buy-in that Bitcoin has in regards to, hasn't quite had the appetite. For a number of reasons, I think altcoins are suffering, many of them, from a bit of an identity crisis from an institutional adoption point of view. But inflow is still very sort of positive at a time when there's no retail participation. And again, bad and good news there is, the bad news is exactly that, no retail participation. The good news is it will come. And when you look at the majority of the altcoin sector, it just looks like a Google Trends chart. And that's because they are more reliant on retail, which ultimately will come for the prospect of getting rich, likely at the wrong time, when people like me and you have sort of been gobbling up those lows, ready for an uptrend, just like we were predicting with Bitcoin all the way down here. This is done spectacularly. And there's an overlay here in regards to what we're expecting with the sort of cycles. You can see a break of resistance, very clear resistance, now potentially flipped into support, ready for that continuation. We have a confluence of targets that take you there. When we look at the total cryptocurrency market cap, we are looking at a bull flag that ultimately, at the low of this bull flag, would have seen the space double and then some. I do believe you've actually triggered this, and you're now, again, breakout retest, finding it as previous resistance as support, ready for that continuation. We also have the likes of Total 2, and we've got multiple short-term targets and then a broader target for Total 2 in regards to, again, its own bull flag and a broader head and shoulders that sees it get to 3.7 trillion. Also Total 3 really doesn't look that bad at all, very much broken out of its flag. And we're likely going to see continuation, some sort of continuation structure set up on the back end of this. And of course others which many people don't talk about. You can look at Bitcoin miners, they all point in a very sort of similar cyclical direction, aligning with the cycles that we see for the crypto space broadly. There's of course others, and there's multiple. You know, we've compared Ethereum to what the S&P did in regards to this just being a pullback before you see that broader continuation. I'll show you guys that once again. We don't want Cardano. Poor Cardano, by the way, with Charles Hoskinson sort of coming out and capitulating to the, I don't say capitulating, being a great man, sort of requires a lot, but he certainly came out saying that he was sort of going to step back from the space due to the negativity, which there's a lot of right now. However, you don't want to follow the crowd. You don't want to be a sheep. You want to be interested when other people aren't and understand and have the foresight in a asset in regards to achieving its potential, and there being a journey that comes with that. Here we have Ethereum at the top and the SPY at the bottom. This is very textbook. We know what we're looking at. There's ultimately broad continuation to come, which, going back to my point at the top, start of the video, is very much confirmed in regards to like election cycles, 4-year cycle, global liquidity, etc., etc. So hang in there, guys. Number of bullish charts we've just shown you. BTC. Obviously Total 2, Total 3, others. And when we look at Grayscale's digital large cap fund, remember this is on the cusp of potentially having an ETF. We've got a $175 target. It's currently at $25. You know, this ultimately will get reached just like our GBTC target got reached. And that's essentially going to reflect very positively on the altcoin market. It's not just Grayscale digital large cap, it's also Bitwise crypto index and even 21 shares index. You know, they're ultimately all pointing to upside and they're reflections of the altcoin market broadly. So I think there's a lot of anxiety, certainly around the election, which I think is very, very understandable. It makes sense, right? Certainly if you're an American, there's a lot of uncertainty that rides on the back end of this. I think people are very worried about a Harris win, because I think this might cause the markets to crash. Even if it does initially, the broader trajectory or trend with elections is post them the markets do very well. And we've got a number of things that give us confluence in regards to expecting that to be the case with this one. And also in regards to that data, there's been both sides of the political spectrum. They've ultimately led to the same outcome in regards to how the markets react, perhaps just achieved it in different approaches. When we look at sentiment, it's at an all-time low. Certainly in regards to this cycle, that will come back, and actually that's the perfect time to be looking into the space, is when other people aren't, when other people don't want to sort of partake. That's when you want to be doing so, because retail will always show up at the end of a market, and I'm sure many of you can actually relate to that in regards to your own experiences. That's it from me, guys. Hang in there. Brighter days are ahead of us. We'll be reporting obviously post today's event. We might even do an evening video. If you've got any suggestions for that, do let me know in the comment section. Stay tuned. We'll see you all in the next one.